Following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Good afternoon, everyone. Happy Monday. Ken Shreve with you. Welcome to another edition of Breakout Investing on TFNN. The number to use, 877-927-6648. Give me a call. Let's talk about this market. My show airs every day on TFNN just before the Tom O'Brien Show. Breakout Investing can be heard daily from 3 to 4 Eastern. You can pick my show up as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi right in your smartphone browser, and you can get the stream that way as well. And don't forget to check out Tiger TV on the homepage of tfnn.com. That is also viewable on your handheld device. With Tiger TV, you can look at charts live right as I'm looking at them on the show. Channel 1, the show is carried live. It is archived on Channel 13. Today is Monday. Tomorrow is Tuesday. That means the next update to my Ultimate Growth Stocks newsletter will be published tomorrow morning. So be sure to check that out if you want to try 30 days free of Ultimate Growth Stocks. You can do that right on the homepage of TFNN.com. Up along the top, you'll see a newsletters tab. Click on investment newsletters after that, and you'll see Ultimate Growth Stocks right there. Obviously, it's a growth stock newsletter. I've got 5 open long positions right now and 2 short positions. So to see what's on the watch list, what's on the model portfolio, check out 30 days free. I think you'll like what you'll see. And don't forget about the Tiger Dollar promotion going on at TFNN. It goes on sporadically throughout the year, but particularly around the holiday time. If you purchase Tiger Dollars, we'll donate up to 10% of your purchase price to the Salvation Army. Sign up by December 19th and get a 25% bonus match on any amount you purchase over $500. You can use Tiger Dollars to buy newsletter subscriptions. So basically, when you buy Tiger Dollars, you're saving. You're automatically getting a match on a certain percentage match on any amount that you purchase. Again, if you sign up by December 19th, you'll get a 25% bonus match on any amount over $500. So it's a great way to save money on a variety of premium products and services at TFNN.com. Well, the markets were roiled earlier today on news that Italian Prime Minister Mario Monti said he intends to resign by the end of the year. But overall, it's been a pretty decent performance for the markets. Volume is tracking lower than what we saw Friday. Let's quickly update the NASDAQ composite here. See, the tech index is up a little more than 7 points to 2985. So we're looking at 6 days now where the composite has been below its 50-day moving average. It is still vulnerable, and with Apple trading as weak as it is, it's not surprising to see the NASDAQ composite still under some duress here. This 50-day moving average being a ceiling for the time being is a concern. But then again, you look at the S&P 500 and the Dow, and you see 2 index charts that look actually quite a bit better than the NASDAQ composite. The S&P 500 right now up fractionally to 1418. It is still sitting just above its 50-day moving average, and the Dow Jones Industrial is up a little more than 23 points, also sitting slightly above its 50-day moving average as well. So up 23 points to 13,178. Mentioned volume on the New York Stock Exchange and NASDAQ today. NASDAQ volume tracking about 5% lighter than what we saw Friday, which was relatively light at 1.58 billion shares. NYSE volume today tracking about 10% lower than what we saw Friday, which was also light at 600 104 million shares. Taking a look at Dow component McDonald's, finally some good news for a stock that has really been beaten down in price. It has rallied nicely off the mid-November lows, but McDonald's was a $94 stock, pulled back all the way down to $83, $84 a share. It's back up at $89.69, having a good day today, up 1.4%. They came out with November sales results. Global same-store sales in November up 2.4%. In the U.S., they were up 2.5%. Europe up 1.4%. Asia, Pacific, Middle East, and Africa up 0.6%. Company continues to do well with its breakfast offerings, but this month of same-store sales data was certainly better than prior months, which really caused a lot of price weakness in the stock. Also in the Dow, shares of Hewlett-Packard continue to gain ground here. Impressive move for the stock. Again, since those mid-November market lows, it is working on its fifth straight gain here. It's up 33 cents today, 2.4% gain to 14.14. We're looking at 8 price gains in the past 9 trading sessions if the gains hold today. A lot of rumors and speculation out there, the main one being that activist investor Carl Icahn may be building up a stake in the company. This in turn is fueling speculation that he'll want to split up the company. Many people out there say that the parts of HP might be worth than the sum. So HP, as it is now, is probably worth less than what it would be if it were to spin off some of its units, whether it's software, services, printing, what have you. But some say a spin-off probably makes the most sense at HP to unlock some value for shareholders here. So have to give the stock credit. It has been rallying nicely. Still a broken stock, no question about it, and not a name that I'm interested in owning, but interesting to see this one coming back to life a little bit here. Yield on the 10-year note down a little bit today to 1.62%. 30-year bond 2.8%. U.S. dollar a little bit lower today, down 0.1% to 80.34. Gold up $8.90 an ounce to or I should say up $8.90 to $1,714.40 an ounce. January crude oil lost ground again, down 37 cents, 0.4%, settles at 85.56 a barrel. Did you see Barron's out with their top 10 stocks for 2013? Always interesting, always good entertainment. I have to remind people, though, that this is definitely the time of year where you're going to see the prognostications. I'm, asked for them. A lot of people are asked for their predictions for 2013. It's obviously very more entertainment than anything else. But Barron's likes Apple, thinks that Apple is going to be a top performer in 2013. I couldn't disagree with that. More shares of Apple remain under pressure today, down $1.25, not a big percentage decline, but recently trading around 532. Jefferies today cut their price target on Apple down to $800 from $900. Based on their expectation for slowing growth. And, when you look at Apple's earnings report, the next one will be out in mid to late January. Earnings are expected to fall 4% from a year ago to $13.31 a share. Sales up 18% to $54.6 billion. So Apple certainly has a lot of challenges ahead of it, and the reason for its tremendous price weakness recently is because of concerns about slowing growth and execution going forward, competition, all that stuff. 877-927-6648. Going to take our first call from the day. Head out to West Palm Beach, Florida. Beautiful area. Talk to Frank, who wants to talk Netflix. How you doing, Frank?
Is there anything this guy will never lie about, this Netflix owner? I mean, he's incredible. I mean, first it was Icon, and before it was these other guys, and now it's Disney World.
So Reed Hastings is a slick Willie of sorts, huh?
Well, you know it. I mean, and that's not even going to take effect until, 2 years from now or something?
Now, what headline are you talking about? There have been a lot of headlines around Netflix recently. There was the Facebook post last week where I thought was pretty much a non-issue. But
what do you mean, Netflix and Facebook?
Reed Hastings, he made a Facebook post talking about the SEC gave him a regulation fair disclosure, a Wells notice, because they felt like he provided material information about the company's business on Facebook, but it didn't go out to a large enough group of people because it only went on Facebook. You didn't hear about that?
Yeah, I remember that. But the last thing was he hooked up with Disney World to get old movies or something.
Oh, right, yeah, the Walt Disney big agreement with Walt Disney.
All of a sudden, just when my puts are doing good, boom! I get my legs knocked out from under me.
Well, listen, it's
slick. I mean, it's one thing or the other. You notice that from the Icon thing to the Morgan Stanley thing, and it never ends.
Well, it's it's a stock. The buyers have definitely come back into Netflix here, and I got to tell you that Walt Disney news, the distribution agreement that they signed with them was unexpected, and how it's going to help fundamentals going forward, I don't completely have a handle on that yet. But they did beat out a lot of these paid cable subscribers, the HBOs, the Showtimes, and so it was widely perceived as a coup for Netflix. But
nobody knew, and it caught me by surprise. I said, okay, he had his little run up with Icon, and good, and that disappeared. So good, it's going to go back down where it's supposed to be 70, 65, and here comes this Disney thing and just knocks me to. I have the January puts.
Yeah. So are you profitable on the position? Are you down a little bit, or where are you at on it, Frank?
Way down. He shot up after that thing with Disney. Well, he shot up to 86.
Yeah.
He went from 74 to 86.
Yeah.
And then now he's down to 80 something. I don't even know where he is.
Well, it's right around $86 a share. Yeah, so it made a big move last week. That was on the Disney.
Unbelievable, the lies, this guy.
Yeah. Well, I wish you well, Frank. Stay in touch.
Yeah, I wish you could tell me if we're going to come down a little bit on it.
Well, what it's doing is, if you look at its daily chart, and you had that Disney news last week, and it's holding on to those gains pretty well. So I would say support right now is going to be. Let me just look real quick here.
Oh.
Let me just pull this up in Tiger TV, and we'll pull up Netflix, and. It's hold 82, 83 looks like support right now. If it comes down there and finds support, this uptrend is still intact. 82. Don't see any signs. Yeah.
All right, thanks, man.
Okay, Frank, take care. All right, Frank hoping Netflix is going to go down despite some positive headlines. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. We just talked to Frank from West Palm Beach about Netflix. He's in some puts there. He's been hurt by the move that Netflix made last week on that Disney distribution agreement, where Netflix is going to have first dibs on movies from all of its properties. You know, what you have with Netflix here is a stock that is in an uptrend again. It's a stock under accumulation. I mentioned the $82, $83 price level. That's support right now. It's possible that you could get a pullback for Netflix down to that 82, 83 price level. If you do, I don't think there's any reason to be short this stock right now, or to be, making bearish bets on the stock with put options, and only because it is a stock that is starting to see renewed buying demand. And it's a headline. It's a volatile stock headline-wise, and I don't think the company is out of the woods yet in terms of returning to bona fide earnings and sales growth in coming quarters. But heavy volume price gains, low volume declines. The trend is up here. So being short or having puts, you're kind of swimming against a tough tide here. So it would be one where if it comes down to 82, 83, I'd get out of that one. All right, next up, let's go to Roger, Mount Vernon, Washington. How you doing, Roger?
Hey, pretty good, Kenny. How about yourself?
Doing all right. Thank you very much.
Say, yeah, I was looking at the price line, kind of interesting. Kind of sandwiched in between the 200 and the 50-day.
Yeah.
And we got the 25-day going up through the 50. And it looks to me like it's going to bounce a little bit, and then maybe get interested in shorting below the 200 or the 50. I don't know quite what to do with this little thing.
Yeah, so I mean, this was a stock that was really looking weak to me for a while. I was surprised to see it rally. What was it? Maybe two weeks ago. But yeah, there was a negative note today came out. I think it was. Deutsche Bank, they downgraded Priceline to hold from buy. They're citing tougher competition from Expedia. I'm not a fan of Priceline. This is again one of these big bull market leaders. I think the chances of lower prices outweigh the chances for higher prices from here. That's what I'll start with. So I think it's. It's a stock taking a big hit today, down almost 5% to 626.93. So you're right that it's this is one where the 200-day and the 50-day are inverted because it's been such a laggard price performer for so long. You've actually got the 200-day above the 50-day. So the support is at 620. That's going to be its 50-day moving average, and it's at 626.93 right now. So I would expect it could hold there, and then you've got this new resistance level right around 650. So I still think this one could be a good short. I think you're right in thinking that it could bounce a little bit from here. If it gets down to that 620 level, it could bounce a little bit, but then I think this is a good short play on the next heavy volume decline after today, because there's definitely a stock under distribution today for sure.
Well, I wondered what brought it down. I didn't realize that had been given a neutral rating. It seems like it sort of plays against Europe a little bit,
Well, they have fairly significant exposure in Europe, and I think it was their last earnings report came out. They said, yeah, Europe continues to be pretty good. There might have been two earnings reports or the last one. But the stock has held up pretty well because they do have a lot of exposure in Europe. But I think this is a kind of a story similar to Apple. It's a company it's going to be hard for them to maintain their growth rates going forward, and I think that's kind of why you're seeing the stock acting the way it is. So I think it's a better short than a better long at this point. But give it a little more time. Just watch how it responds to this downgrade today. If it rallies back in light volume, for example, over the next couple days, that tells me you're probably going to see lower prices ahead.
So you're looking at that 50-day then, pretty much, as far as shorting it below.
Yeah,
there.
Well, that's pretty legitimate support right now at 620, and you can see the stock is down near its session low today. It's right around 627 thereabouts. So it's got another 7 points to go to get down to 620. If it does eventually get down there, I would expect that it could bounce a little bit, but the bottom line is there've been some big sellers in this stock for a while, and I wouldn't be surprised to see it continue.
Well, would you short it here from 27 to 20?
I would not. Okay. I would wait to see how it responds. I would just watch it for the next couple of days. If it rallies back in light volume, starts closing near lows, and showing you that buying demand is drying up, then I would. But give it a couple days.
Okay, I'll do that then. What do you think about Intuitive Surgical? Do you have any time for that one?
I'll tell you what. Hang on the line. I'll get to you when we come back from the break. Okay?
Thanks. I'll hold on.
All right. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Finishing up our conversation with Roger in Washington State. All right, Roger, so we're clear on Priceline. You also had a question on Intuitive Surgical, correct?
Yeah, I did. It's previously big leader, that kind of thing. Excuse me, but it's acting more like following the stock market, following the Dow.
Yeah, I mean, this is one that looks like another tired stock to me. Priceline has looked like a tired stock for a long time. Intuitive Surgical, another big winner that also looks tired to me. So I'm sure on your daily charts you've got your 50-day and your 200-day. I mean, this is a classic example of possible resistance taking shape here. The stock is, it's up 1.5% today to 526, bumping up against significant resistance, or what could be resistance, at 527. So this one looks a little more actionable than Priceline at this point, but the way I go about, my Ultimate Growth Stocks model portfolio, I have a short section in there every week, and I'm currently short 2 growth stocks, not Priceline, not ISRG. Right. But when I decide to go short a stock, it's when a former big leader that's up several 100% over the past few years, when it breaks through support and then it tries to rally back up above support and then repeatedly meets with resistance. That's telling me that buying demand is completely drying up. Now, I don't want to short a stock too early. I think with Intuitive Surgical here, yeah, it's trying to rally back. It was under a lot of pressure, came down from 550 all the way down to 510 last week, and here it is. It's outperforming today, but it's bumping up against what could be a significant resistance level, 527. I expect there's a chance that it could turn lower from here, but I still wouldn't be ready to short it. I would be ready for it to try to retest that 527, and if it keeps failing, that is your best sign yet that your chances are pretty good for making money on the short side. But this is only its first attempt. You understand what I'm saying?
Yeah, I do. It is no longer a power stock, so
I don't think so. Yeah, I don't think so. But with Priceline and Intuitive Surgical, what you're looking at two stocks that are not yet under unequivocal distribution. In other words, it's not clear yet. I mean, with Priceline today, yeah, there's some big money selling that stock, but with generally speaking, over the past several weeks, they are stocks that have not shown blatant signs of institutional selling. That's another criteria I like to use when shorting a stock. Shorting broken stocks that are under distribution, not under accumulation. So I think Intuitive Surgical and Priceline are good candidates. They're just not. They're getting ripe. They're not completely ripe though.
They're just not ready yet. Then
not ready yet.
Not really, but just keep watching them then and look for volume and whatever the market.
In my newsletter last week, I had Under Armour UA as one that we were watching as a potential. If you look at we can get off the air and you look at a daily chart of Under Armour, Roger, and you can see the resistance that it met with its 50-day moving average a couple of weeks ago. Failed. It tried to rally back, failed again. And look at the stock today; it's down, underperforming the market materially. And Under Armour is a stock that is under unequivocal distribution. So that was one that I flagged last week. And again, I always give some short ideas to watch. Some are more actionable than others, but the bottom line is that they are stocks that look to me like they're breaking down.
Okay, I gotcha.
Okay,
so take a look at that UA chart then. You're going to use that as sort of a template for both Priceline and Intuitive Surgical.
Well, Intuitive, watching in Tiger TV, Under Armour, went up against its 50-day moving average in late November and failed miserably. You can see heavy volume came into the stock here. It tried to rally back above, found a little support at its 200-day moving average, but broke below that line today in very heavy volume. So it's down 4.2%. Volume much heavier than it was Friday. So this was my suspicions last week. This was a stock that was starting to show material weakness, and that has proven to be the case, I think, after today.
Yeah. Well, thanks a lot, Kenny. You have a happy New Year.
Okay, same to you, Roger. Always good to hear from you. Appreciate it.
You bet. Bye.
All right, take care. All right, Roger, loyal listener to the show. Always like talking to him. 877-927-6648. This is the type of market, again, where it's such a headline-driven market. You never know when that one headline is going to come out from Washington, and it's going to fuel a 200, 300-point gain in the Dow, and all of a sudden these short positions that we're thinking of putting on here all of a sudden aren't going to look very good. So I've said it before, I've said it again. This is sort of a no-man's land market where, sometimes it feels right to be short. Sometimes it feels right to be long, but either way, it's tough to be long with conviction. It's tough to be short with conviction, and in market environments like that, I generally like to do not much. So again, I do have some long positions on in the Ultimate Growth Stocks model portfolio. I've got two short positions that I feel pretty good about, but you know what? I understand that if we get this fiscal cliff agreement, it's probably, I don't know for sure, but it's probably going to bring some buyers in from the sidelines, and then we'll have to decide what to do with the short positions. And I do feel like the portfolio, the stocks that I have in there currently are, the portfolio's got stocks that I believe have a good chance of outperforming if new money comes in from the sidelines. That's the other tricky thing about this market. It's just where there's just this low volume, wishy-washy environment where there are a lot of good technical setups out there. some good short setups, some good long setups, and the long setups that I'm watching and that I currently own are just kind of not doing much of anything because there's just no volume around to really fuel upside gains. So trying to stay bullish here, but understand that the market, especially with the NASDAQ composite, like we've been talking about, bumping up against that 50-day moving average, not able to go back above it. That is, potentially problematic. Let's take a look at some other headline stocks today. Here's a thin stock, ticker IN. This is Intermec having a good day today. Big gap up. Stock's up 23% to $9.81 on news. Honeywell will acquire it for $10 a share. $600 million transaction. Intermec makes barcode printers and radio frequency identification products. Ingersoll Rand. This is a stock that had a pretty good chart ahead of the news that came out today. It confirmed plans to spin off its security technology business into a public company. Ingersoll Rand will focus its efforts now on its heating, air conditioning, and ventilation systems business. Company will also buy back $2 billion in stock and hike its quarterly dividend by 31% to 21 cents a share. Interesting day for Ingersoll here. As I read my notes here, we see that Ingersoll has reversed in spectacular fashion, down 59 cents, now 1.2% decline to 48.10. Very bearish price action for IR, despite some seemingly positive headlines. There was a big volume in the stock Friday. Stock closed in the middle half of its range, trying to break out here, but this is a heavy volume reversal, bearish, no question about it. Apparel maker VFC, this one continuing to act weak here, cuts below its 200-day moving average. Today, it is trading just above that support level right now, but shares still down 2.5% to 148.71. VFC has a lot of brands under its umbrella: Vans, The North Face, Wrangler, Timberland. But this is a stock that is under a lot of institutional selling pressure in recent weeks. I would be careful with this one. Not sure it's on sale here, down at $148 a share. Stocks that are being sold by institutions, not a place where individual investors should be playing. Phillips Van Heusen, another apparel maker, holding up much better than VFC. Shares of Phillips Van Heusen under some pressure today, down 1.9% to 110.33, but still holding comfortably above its 50-day simple moving average, right around 104. Okay, over the weekend, some data out of China, pretty good. Industrial production in China up 10.1% in November. Retail sales up 14.9%. Goldman Sachs looking for 8.1% GDP growth in 2013. So pretty good data out of China. When you look at that Hang Seng Index, boy, I mean, this thing is really just a picture of technical strength here. Let's take a look at the Hong Kong Hang Seng Index. Here it is. We'll see it's just flirting with a breakout. Made a big move last week. When was that? Wednesday or Thursday? Made a nice move, technical breakout. It's holding on to those gains. It's tried to move higher over the past couple of sessions, but finished near its session low. But everybody, wondering about a hard landing for China's economy. It doesn't look like that's going to be the case. The economic data continue to generally look pretty good, and inflation, although elevated, remains fairly well contained. On the home front this week, pretty quiet in terms of data here. On Wednesday, a two-day Fed meeting concludes. We'll likely get a new economic forecast for the rest of this year into 2013, maybe get some more details and color from the Fed about what it is going to do to continue to stimulate the economy. The economy's been creating on average about 150,000 jobs over the past 12 months. That is not going to be enough to cause a dent in the unemployment rate, and it's not going to help GDP growth going forward either with that little job creation. So we'll get more color from the Fed on Wednesday. Thursday, we've got weekly jobless claims, retail sales for November. And also look at the latest look at the producer price index. We have the CPI due Friday. All right, let's take a look at some interesting charts out here, starting with Rackspace Hosting, RAX. This is company number 2 provider of cloud computing infrastructure services behind Amazon Web Services. Beautiful technical setup here for Rackspace. When I see charts out there that look like this, it tells me that a stock like Rackspace could be a leader going forward. Very healthy chart here, healthy fundamentals as well. Shares of Rackspace today not doing a whole lot, up 27 cents to 67.60, but this one I would not be surprised to try for a breakout over $70 a share in the not too distant future. Good technical breakout for Celgene, at least at one point today. Let's see how the stock is faring. We were talking about Celgene last week. Yeah, holding on to gains nicely here. Breakout over $80 a share, now trading at $80.55, up 2.4% on the day. Pretty good volume behind the move as well. It's already traded 4.1 million shares today. That's well above its average daily volume. Celgene's key drug is Revlimid, which is used to treat multiple myeloma, and its drug Abraxane is used as a treatment for breast cancer, but also had some pretty good clinical data on Abraxane as a treatment for pancreatic cancer. So that was some big news for Celgene. This is a good-looking chart, technical breakout for Celgene today. Let's take a look at Sirona, S-I-R-O, Sirona Dental Systems, S-I-R-O. As its name would indicate, it makes dental equipment for dentists. I love how this stock is just moving sideways after that big gap up in November. This has been, it's just a good solid technical setup here. We'll swing over, take a look at its weekly chart here. Sirona Dental Systems, and we'll see just a really, really bullish technical setup here. Like the way this stock looks. Market cap of $3.5 billion. Stock under accumulation. The swing point here is 63.86. 63.86. So it's not too far from that swing point. Wouldn't be surprised to see this one work as well. Cigna, ticker CI on the New York Stock Exchange, a provider of managed care services. Another interesting technical setup here. Bullish no matter how you slice it. Shares of Cigna today up 4 cents to 52.94, forming what's called a flat base here, buy point of 53.75. Take a look at the weekly for Cigna, and we'll see the flat base forming, and yeah, the swing point is going to be over on the left side of the base here, but good supporting action at its 10-week moving average. Another strong technical setup here. Let's also take a look at TV. I'd never not heard of this company before. Ticker TV. This is a media company based in Mexico. They produce and broadcast Spanish language television programming in Mexico. UBS was out with a note earlier today saying that the company could benefit from regulatory changes in the country. Nice breakout for Grupo Televisa last week. This is an ADR, of course. Stock is down 10 cents today to $25.02. I think I've got a weekly chart here. Yeah, here's the weekly chart. You'll see that 6% gain for the stock last week. Breakout in heavy volume, holding gains nicely. So another good setup in the market here. Stock acting very well. So you can see no shortage of decent technical setups out there. Question is the market going to let these things move? Let's hope so. Breakout Investing on TFNN, folks. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing. Ken Shreve with you, 877-927-6648. Next stop's going to be Beantown. Tim wants to talk IOC. Tim, I apologize for keeping you on there. Didn't see your name. How are you doing today?
Good, Ken. How are you? I was just wondering what you might see for Interoil for the next 6 months or so.
Interoil, that's oil refiner. You know, the group is actually pretty strong. This is one that has obviously come in quite a bit. Could be putting in a bottom here. I think it's still too early to say. I mean, it's in a downtrend. A lot of big sellers in the stock. So I just don't have a strong opinion on it right now. It's just under a lot of institutional selling pressure. If I see institutions start to come back into this thing, I'd feel better that it's put in a bottom, but it's just kind of early to say right now. Do you own it? You're looking to buy it?
No, I'm just looking at it. It seems to be, one day it's $75, the next day it's $55. It fluctuates, but they discovered gas over in New Guinea, and they supposedly are teaming up with perhaps Royal Dutch Shell on a project, and the news seems good. It just seems like the stock is fluctuating like crazy.
Yeah, it's been a pretty rough ride for IOC. Like I said, when I say that institutions have been selling the stock, it was a $95 stock back in September, and now it's around just over 50. And my feelings about Interoil would be better. I just really have to let the technicals be my guide here. If institutions, which are really the driving force behind stock prices, if they're interested in owning this, you would expect this to begin a slow climb to 54 to 55, but you want to see some volume expansion behind that move, and then maybe it's okay to start a small position, but the trend is still to me firmly downward in this name until proven otherwise.
Okay, well, thank you very much, Ken.
All right, appreciate it, Tim. Good to hear from you. Thanks for hanging on as well. Have a good day.
Happy holidays. Bye-bye.
Same to you. Thank you.
Thank you. Bye.
All right, good to hear from my own stomping grounds, Boston, Massachusetts. Born and raised in Rhode Island, lived quite a long time in Boston myself. Been out in the Los Angeles area for close to 20 years now. People ask me, you still follow the Red Sox and the Patriots? I do, but I enjoy going to see the Dodgers out here as well. So I try to not as easy following Boston baseball out here because you just don't get to see the games, but I'm still a Red Sox and Patriots fan, no doubt. All right, let's check in on the markets here before we head into the close. I had to switch my computers around here, so let me see what's going on with the markets here. Just bear with me here. All right, check in on the NASDAQ composite as we head into the close here. NASDAQ composite up about 7.5 points, 0.3% to 2985. So not much has changed in the composite. S&P 500 still holding above its 50-day moving average, but not by much. It's up fractionally. Not much movement here. Volume on the New York Stock Exchange and NASDAQ set to come in lighter than what we saw Friday. Nothing new there. S&P 500 last trading around 1418. And finally, we'll check in on the Dow Jones Industrial Average, and it is up close to 19 points right now to 13,174. Nice to kick off the week with you on this Monday. I'll be back tomorrow, same time, 3 to 4 Eastern, for another edition of Breakout Investing. Not much in the way of earnings after the close. Casey's General Stores, CASY. Tomorrow we have Dollar General. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, folks. Thanks for listening.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.